Let's bring in former Atlanta Fed President Dennis Lockhart. Talk a bit about yesterday, if you don't mind, Dennis, some of the reaction to a testimony that I think it was B of A argued could have been more hawkish, wasn't exactly dovish. A lot of cases being made that June remains a reasonable time for a first cut. Maybe, of course, PCE gets in the 2.5 range. Your thoughts?
Carl, sounds pretty good to me. I think your analysis is a good one. I think the signaling was very consistent with Fed speak for the last 2 or 3 months. Basic message is yes, sometime this year, but we're in no hurry, and we're not going to be rushed into a decision. And you know, more data equals more confidence. So that's what I thought I heard. And June is certainly on the table, I think, is a reasonable time, but it could be later.
He did say, he made 2 points. One was that goods prices have come down, gone negative, even made a point to say that housing services, new leases are softening a bit. Clearly wants more on that front, though, right?
Yes, and yesterday, I believe it was on this program, Mark Zandi made I thought, a very interesting analysis, which suggested that rate cuts would stimulate more building and conceivably stimulate more inventory in existing homes and more transactions. Having said that, I think it's an interesting analysis, but I don't think the Fed will focus on one element of the inflation picture.
With the State of the Union, as I've been talking about in mind tonight, and inflation likely to be a theme, the shrinkflation, who really deserves the blame for the historically high inflation rates that Americans have experienced and continue to experience right now?
Well, first, I have to say, I really don't think presidents have a great deal of effect on inflation rates, quite frankly, whether that's for positive or for negative.
Well, the administration did roll out a $2 trillion stimulus bill.
I think there are multiple factors at work. I think the supply chain was at work. The Ukraine war was at work in this picture, and certainly the fiscal stimulus was at work. And they all combined to create a lot of funding for consumption after the pandemic abated. But I think you cannot blame the inflation on one factor.
Go ahead.
What's your read on productivity? 3.2 is not a bad number. Are you of the mind of waiting longer rather than shorter in terms of making the leap to say this is actually going to be a disinflationary force over the long term?
Yeah, I would wait longer, but I think it's very encouraging. And if it is some indication, even very early, of the effect of AI, or there are other factors at work, over 3% productivity growth is a good number. And we need this kind of productivity growth in order to have above trend growth on a sustainable basis. So I find it encouraging, but I would say what we're seeing now, to use an expression that's been used before, is green shoots. So these are the early indications of what might be a different era for productivity growth.